Australian dollar futures opened this session in negative territory. It appears the catalyst was Chinese Premier Li Keqiang, who talked before 100,000 people in an emergency meeting with regards to COVID and the Chinese economy. The spillover, it seemed to be with the ASX 200, which fell 0.75%, also saw lower copper and iron ore prices. Also, news flow, or maybe the lack thereof, with regards to the new Labour government in Australia and what that might do or potentially could do to RBA's plans to raise rates, also the coal industry and different projects like that. Going into the bulk of our session, full of data, price action was range bound. We had Q1 GDP and core PCE were both revised lower. Personal consumption, though, did improve. The price deflator actually increased versus expectations. We had a mixed read on jobs, initial claims down more than expected, continuing claims actually better than expected. Pending home sales for April fell more than anticipated, and that's 6 months of consecutive drops for that indicator. Lastly, the Kansas City Fed Index and the manufacturing, it did slow, but it is still strong. That said, we're seeing a domestic equity rally here in the U.S., risk-on rally, helping the dollar and definitely hurting Australian dollar. Looking at options, I look at CME Group CVOL looking at June, which traded about the 25th percentile on a 1-month basis. At the money vol slightly lower, although both variances are down. The put variance is down more. That's causing skew to go higher on the day. Option volume fairly spread out. Did see a pretty big call spread trade in June, the 70-50, 70-70 call spread. Also saw some volume in the 70 and 70-20 puts. Lastly, CME Group Australian dollar E-micro mini futures volume fairly strong. Yesterday we saw volume of 13,061 with an open interest of 4,415.